All right, good afternoon, good morning, good afternoon, good evening, wherever you're joining us from. Hey, Deborah, how are you doing? Hey, Zoran. So, guys, if you can hear me, just leave me a message in the chat, give me a thumbs up, let me know. Just want to make sure that you can hear me all right. Hey, Zoran. Good to see you guys here back and nice and early. How are you doing today? Hope you traded well through the FOMC meeting last night. I'm good, Deborah. Thanks for that. I'm still coughing away, but markets have been a little bit more active, so that's good at distracting me. Did you trade the markets last night? There was almost no price action last night or yesterday. It's pretty much a shoot up, shoot down, bounce around kind of thing. So it's really hard to trade it in medium term. I thought it's either you went long term or you went super short term. So if anyone was trading in the middle time frames, that would have been quite disastrous, I believe. Fantastic, Zoran. Close positions before announcement, got out before the fireworks or before the crash. All right, so let's see if anyone else streams in, but we shall get started. Thank you all for joining us this session again. Today is Thursday. We are going through the trading strategy clinic. So what I'll do during the strategy clinic, I'll be looking for your questions, looking for your input. If you'll be sharing with me how you approach the markets, how you trade, what are the things you look at, I'll be happy to see if I have any opinions or thoughts that I could contribute to help you tweak your trading strategy to make it a bit more profitable, a bit more consistent, or maybe to reduce the potential losses, right? So that's why we do at the strategy clinic, try to diagnose your trading strategy for the better. My name is Jin Dao. I'm sure most of you here have been to one of my sessions before. I see a few familiar names. Today is the 28th of July. We are going through the strategy clinic after the big fireworks on the markets last night. So let's get into it. Ready to go. Can you see my screen? Big thumbs up if you can see my screen there. Good job. All right, so as usual, before we start any session, any webinars, any sharing sessions, a quick disclaimer: any information, contacts, or opinions expressed in this presentation and in the following slides are solely those of the presenter, myself, and not necessarily those of Vantage, solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Right? Basically, what it means is that I will be looking at charts, I'll be looking at news, I'll be looking at a lot of information. I'll be sharing with you my thoughts, my views of how I think the market would move or could move. If you are looking into jumping into any trades, please make sure you do your own due diligence. That includes making sure you have the right risk management strategy. You're trading at the right size, you're trading based on a method that you're familiar with, you're confident with. Don't just blindly jump into any trades without considering your risk management and you're doing your due diligence, right? So with that disclaimer done, just do a quick introduction again. We have a whole team of analysts here. Sometimes Desmond jumps onto the session. I'm sure a lot of you know about Cassandra. She's done some sessions as well. Myself, I'm Jin Dao, Thai. Most people call me Jin. I'm one of the prop traders here, where I'll share with you how I trade. If I don't get many questions, I'll share with you how I trade, how I look into the markets, the way I look into the trades, or I kind of analyze charts or analyze the markets. I always look at the fundamentals first. So I'm very big on looking at fundamentals. I think about the economic numbers, the statements. I was up till the wee hours this morning watching and listening to the press conference from the FOMC, catching trades during the press conference as well. So that's what I do. I look at the fundamentals first, then I look into the charts to try and figure out when it's a good time to get into the trade together with the fundamentals, right? So it always lines up. It needs to line up before I get into a trade. If it doesn't line up, then I would sit there, I'll wait for it to line up before I get into the trade. So the whole team here with that. Let me get into the charts. First question we have here. I look for the 61.8 and 78.6 fib levels to match with the support or resistance levels, at least 2 rejections, H4 trend, and if applicable, EMA as a support resistance. Do you think this is a good strategy? Okay, very good question there. So before I get into further analysis, let me just address that question straight away. Let's look at a possible, oh look, that's one of the analysis I did. I was looking for it to break out during the news to push out of that 0.6965 or 0.6960 level towards upside. It's done that exactly. So I'm super happy, but now that that move is done, I'm going to remove that. All right. So bear with me while I click away a little bit. So looking at the fib levels first. Where's my view? Sorry, I'm coughing a little bit now. So we have 61.8. How many other of you use the fib levels, just so I know who's looking into these? So we've got the line moving towards upside here. From towards upside, we've got our 61. Let me just drag this across a little bit. So we've got a 61.8 here. We have the 78.6 there. What we can also do is to, doesn't look that great. You could try this move as well, right? So I tend to try and put 2 fib levels together just to see where the confluence is. And in this case, we see a bit of a level there between 0.6874 and 0.6850. So I would say that's a good level there. All right, but let me just take away one just so that we keep it a bit simple first. So how to use this fib levels matching support and resistance with at least 2 rejections. Okay, so I would say that what you would find is that if you look at your levels, you can see 61.8 was there. We saw a good rejection towards upside. 78.6 was a bit messy there. I would say that if you had 2 rejections, might not always play out, but if it does, then it would form a very good setup. So you could do that on the H4 trend. Oh, good. I like it. I like traders staying on H4 trend rather than trying to jump into trades on the smaller time frame if you're not too familiar with it. And then, if applicable, in EMA, let's put in an EMA as well. Where is it? No, okay. Change. So that's a moving average. So we've put in an EMA as a support level. I think what you might have there would be a little bit too much levels, because you would have your fib level, Fibonacci level. Let's see if I try this move. I don't like that one, like here. So you can see a 78.6 here, now at that point there. Where's my tools? So you can see the 78.6 there as a bounce and a rejection. So it broke up, hit, and then looks like it's pushing towards the upside. 50 EMA. Okay, I'll add that in shortly. And then now with the 61.8, which is that side there. Again, we saw that bounce and a rejection. So I think that if you were looking at this to push, like let's say for this, in this case, the Aussie US, to push towards the upside, say that is pushed up, that considering that that's broken, that's pushed up and broken above that 78.6, I would say that, you know, it's considered as a fib level broken. So I wouldn't be too keen on that. Sorry, once I start talking, I start coughing away. So one more thing to consider is that level at that 50 level. Oh man. All right. So what you can also add in is the where is it? Let me just change that one. Let's see how that works. Get that. It's minus 61 there. Towards the upside, we have that level there. What I would say is that I'll be looking for this to push higher, push past that resistance level. So I like how you use the fib levels and the resistance levels. Let me just check with you. Do you find that your Fibonacci levels sometimes or quite often tends to match the support, your horizontal support and resistance levels? Right? And if you're saying that you're looking for two rejections, are you looking for two rejections to a counter trend as a reversal, or looking for that to break through? What's your view? Okay, I like this move. You can see that downward move there. That's correct. And if they do, it's a good it is very good. So that's why, you know, you should use a combination, and I like how you've used a combination with the Fibonacci levels together with your support resistance. Once that lines up, for example, in this case here, that 61.8 lining up very well with my horizontal level there at 101.04. You can say that there's a good confluence area. Oh, pardon me. All right. Let me just put in all the lines. I like having all the lines in there just to see a bit more. Okay, and then you can see that in this case, that 38.2 as well is in that area where I have my line. So that's another confluence. And that's why previously when I did this analysis, I was looking for it to get resisted. So a bit like what you were how you were approaching this. Fibonacci level resisting together with the horizontal resistance level. I was looking for it to turn down. It didn't go as far down as I expected. So it actually came only to the 23.6, but that's actually broken. So it came to my support level, my horizontal support level before bouncing back up again. Right now, still being resisted by that 38.2. So this actually gives you a good view of how the price actually respects to some level the Fibonacci levels. Two rejections would be like if we retrace to 61.8, then we take two rejections of this level to trade from there. Yep. So in this case, let's say, for example, if we see a rejection comes down and it rejects this level again, we could look, and it looks like it's starting to reject this level. We could see a further push towards the downside here. All right. Good questions there. A few pairs you're looking at is the Euro-Aussie reversal. Let's look at some charts as well now. Okay, before I look into the charts, I want to share with you what happened overnight. So at 2 a.m. GMT plus 8, 2 a.m. this morning GMT plus 8, the US Federal Reserve increased interest rates from 1.75 to a 2.5%. So they did a 75 basis point rate increase, pretty much as expected, right? As expected, they did a 75 basis point rate increase to 2.5%. Surprisingly, in the rate statement from the FOMC was very short, right? So there's a rate statement that was just released. It was very short, paying attention to the fact that recent indicators of spending and production have softened. Okay, so slowdown, slight slowdown as spending slows down, production slows down, but job gains have been robust. Unemployment rate has remained low. Inflation still remains elevated with supply and demand imbalances, right? So for me, I look at, when I read the statements, I look at that key points, the higher food and energy prices we are familiar with already, and the overall broader price pressures. The war in Russia and Ukraine, it's a standard paragraph now in most central bank statements. So I kind of skip over that. With that as well, we look into the decision from the FOMC, which is where the committee seeks to achieve maximum inflation, employment and inflation at 2%. And that's why they have raised the rates by 75 basis points and anticipates that ongoing increases in the target range will be appropriate, right? So they actually say that there might be further rate increases and that the committee is strongly committed to returning inflation to its 2% objective. And then following on from that, not much else. This is pretty much a repeat. But what happened here was that as the news came out, as the rate decision came out and the statement came out at 2 a.m., we did see a little bit of movements. I can show you here on the H1 time frame. At about that 2 a.m. time frame here, we saw price go down, right? Price shot down briefly, tried to break past that 1.0127 level, and then it shot straight up. Why did it shoot straight up? Is because at 2:30 a.m. we had the US FOMC press conference, right? The press conference where Chair Powell from the Fed Reserve was having a press conference, and just a bit of a shortcut, instead of watching through the whole press conference together with you, just look at the main headline numbers, headline statements there, where the Fed is looking or committed towards bringing inflation down to 2%. Wage growth is still increasing. So people are still, wage growth and wage inflation is still increasing. The pace of rate hikes will depend on incoming data, right? So the next meeting from the FOMC is in September. So there's about 8 weeks time. So they're going to have a lot of data to crunch through to decide whether inflation is going to slow down, or the growth of inflation is going to slow down, or is it still running out of control. So they're going to depend, the pace of rate hikes or future rate hikes will depend on incoming data. This is quite key, where it says that the Federal Reserve would not hesitate on larger move if needed, right? So the hint there will be that the Fed Reserve is ready to raise rates larger if required. And these recent hikes have been large and come quickly, with the full effects not felt yet, right? Obviously, it hasn't been felt yet because inflation in the US is now at 9.1%. I think it's a 40-year high, despite consecutive 75 basis point increases from the Fed Reserve. And because of that, he says that, hey, we have done a lot of rate increases. Effects have not been felt yet. They're going to see what's going to happen and also depend on the future data. Following on from that, they say that FOMC sees rate increases in 2023, but they will update us in September at the next meeting in September. Very importantly is that he says, he was questioned, Fed Chair Powell was questioned whether he thinks that the US is in recession now, because he doesn't think it's in a recession. But this is important where he says that Powell puts 75 basis point hike on table for September, right? So what happened was that a lot of the markets or a lot of investors sat through this press conference, and they caught that one point where I think if I click on that, you can see a bit of a highlight. No, wait, where was it? Here. Okay, so there was actually a comment from Chair Powell where he said that, I'll make it a bit bigger so it's easy to see. Hey Batips, how you doing? Hey Abib, how you doing? Right, so the comment there was that he said that another big increase is possible, which a lot of investors ignored, but instead they picked on the comments that the rate hikes will eventually slow, right? Will eventually slow down. So investors, especially into the stock market, equity markets, saw a big jump because of that statement where investors and the various market participants saw that comment or heard that comment and anticipated that the Feds will stop or slow down on rate increases. And if they slow down on rate increases, that's why we saw the market jump. But they ignored the fact that they actually said that another big increase is possible. And because of that, that statement came out where he said that the 75 basis point was back onto the table, right? So with all the weakness that we have seen in the dollar index, we saw it drop all the way down towards that 106 level. Seems like it's bouncing back up a little bit now because of that some positivity coming and considerations that there could be a 75 basis point increase in September. So with that, what else to look out for? Tonight at 8:30 p.m. GMT plus 8 again, we do have the US advanced GDP quarter on quarter. It was a minus 1.6%. It's expected a 0.4. So it's quite important here for the GDP number, the advanced GDP number for the US to be a positive number, because it was a minus 1.4 revised to 1.6. If they have consecutive negative numbers. So if this was a minus any number, is going to signal that the US economy is in a technical recession. Yes, in a technical recession is when you have consecutive months or consecutive quarters of negative data. So because of that, we need to see even a 0.4% will show that they have averted some level of a recession, which could be some good news for the US dollar. Right, so apart from that, not much else today. Following on for tomorrow, again, not much news all the way to the CAD GDP number. Month on month looking to go from a 0.3 to a minus 0.2, so not looking very good for the CAD. And then the core PCE price index. This is, you can see core PCE price index is another indication of inflation, right? It differs from the core CPI, but it is another primary inflation measure. And that's what the Fed Reserve has actually indicated. They actually paid more attention to the PCE and the core PCE price index. And in this case, it looks like it's going to go from a 0.3 to a 0.5. So it still shows some growth in terms of the inflation, right? Which could, again, further, because they're all data dependent now, it could further cement that anticipation for a 75 basis point rate hike to come from the Fed Reserve. So with that, translating it all into the charts, we've already seen what happened here on the dollar index, looking at it on the H4 time frame. It is sitting at that 106.25 level right now. sitting at a 106.25 level right now. What we're looking for is whether the talk about a 75 basis points in September could push prices back up. If the GDP number is reasonable, it's not a negative, could it push the DXY back up? And if tomorrow's CPI or core PCE data is stronger at 0.5 or maybe 0.7, could it push prices on the DXY towards upside, as it could further spur the anticipation or the expectations for the Fed Reserve to increase rates, right? So I'm looking for, in this case, at this support level here, could price move back up towards that 107 resistance level. So how I do this, I get that view. I'm saying that it's sitting right across at that support level. It could very well go towards a downside, but we see a bit of a hesitation at this point. It looks like it's trying to push back up, needs a bit of news, needs a bit more further stimulus to push it towards the upside. So I'm looking for that direction. So with that, then I'll start looking into the charts. Like your question there on the Euro Aussie. So I'll look at the Euro Aussie. Right, so Euro Aussie has been, if I zoom out, you can see it has been on a big downward move. A big downward move for two reasons. One is because of the weakness of the previous weakness in the euro dollar. The euro dollar was trying to test that parity level. That's why we saw that big push towards the downside. And also the recent Aussie dollar strength, right? The recent Aussie dollar strength pushing this towards the downside as well. So my previous analysis, my view was that if price were to close below that 1.4566 level or 1.4570 level, I'll be looking for further downside. And in this case, I'll be looking at about a 160 pip move to the downside to the next support level. About a 90, maybe could be a bit less, about 70, 80 pip stop loss, a 1:2 risk reward ratio towards the downside for the Euro Aussie. And why this level here at 1.43 or 1.44 is because if we moved out, you can see that the last time it broke, this is on the daily time frame, the last time it came down and broke below that 1.4625 level, it went straight down towards 1.44 and then bounced strongly towards the upside. So in this case, I'm looking for it to come down, do a bit of a repeat of what happened here in March or April, early April this year. Could we see it happen again in August, in early August, coming up next week, possibly to trade down towards the next support level? All right, so I hope you had that. You said a reversal. I'm not too sure whether we'll see, in this case, the push back towards upside. Why so? Is because for this to push up, what we need to see is the euro strength, like greater euro strength, and the Aussie weakness. And what I'll show you here now is for the euro dollar. I'll take that one away just to clear it up a bit. You can see that euro dollar on the H4 time frame here, still getting resisted by that 1.0250 level. So as it gets rejected there, we could see that push down. So further euro dollar weakness. And then also looking at the Aussie dollar, still pushing towards the upside. So putting that two together, we're looking at, hey, further bit more euro weakness if it fails to break above that resistance. Aussie dollar strength, putting it together, looking at the euro Aussie, I think that we're more likely to see it continue tracking lower towards the support rather than to reverse. All right, so I hope that's good for you. If it makes sense, please let me know. If it doesn't and you need a further explanation, please let me know as well. All right, next one was euro yen. Let me just check. Fantastic, good stuff. All right, so euro yen now, looking at the euro yen, that was what I was looking for, I'll zoom in a bit more so it's easier to see. I was looking for it to break below that 138.30 level, looking to sell down from 138.20. It's there right now. It's broken that level for a test towards the next support level at 137.30. Again, as we look into the possible euro weakness, and this big push is not just because of that euro weakness, it's actually more so because of the US yen, right? US yen didn't move up and she turned down because of that dollar weakness. But you can see that US yen broke all the way towards the downside. That's why we saw that big push towards the downside on the euro yen, right? So let me just add in a line here. The US yen came all the way down, hit that 135 level. Looks like it's bouncing back up a little bit. I think that we're not going to see big upside on the US yen. I think that we could see it turn up before coming back down to test that 135 and possibly to a lower end of that range at about a 134, maybe a 134.60 or 134.50 level. So I would be looking for the US yen to possibly bounce before turning down again. All right. So, and possibly be in that area there. So with that, that's why on the euro yen, I think that I'm looking for it to come down towards that support level. The question you might have now is this too late to enter? Is this too late to enter? Let's say that if we move that line across to this point here, right? So if we say that you're looking to enter below 138, I would say it has to break because it's at a round number level. It needs to break below that 138 level. So I would say that about 137.94. Stop loss can be a little bit tighter there, about 45 pips, just above that near-term resistance. And then take profit at about 61, 62 pips. Is a 1:3.7 risk-reward ratio towards the downside. It could still, and it's most likely going to go down, but the risk-reward is a little bit tight. So be extra careful if you are jumping into that trade. Right? I would say probably want to size it down because the risk reward is not great, positive but not great. Possibly size it down a little bit and you could catch it towards the next support level. All right, so euro CAD. Okay, one thing I noticed here from the question is that you're looking at the euro Aussie, euro yen, and euro CAD. I would be very cautious, as a reminder. We talked about the euro Aussie. I was anticipating for it to drop further towards the downside. The euro yen, I'm looking for it to drop further towards the downside, although a little bit less, only a 60 pip move. And if we look at the euro CAD, looking at some possible, okay, euro CAD will be a little bit different. I would say that there's a bit of a support level there at 1.30, about 1.3030. So it's coming very close to a support level. Just be extra careful. In this case, we might see that reversal. So I think you're asking about some reversals. I think you might see a reversal if price bounces, approaches and bounces off that support level, similar to what happened here, right? Similar to what happened in July, in mid-July, we saw that big bounce. Could it come down, test, maybe break a little bit before bouncing back towards the upside? But the point I was going to raise was that if you look at the euro Aussie, if you look at the euro yen and the euro CAD, make sure you don't jump into all trades. As much as we're talking about the possibilities and the possible trade setups across all three pairs, make sure you don't jump into all three, because the euro Aussie is anticipating further euro weakness to push it down. and Aussie strength to push it down. The euro yen, we're also anticipating the euro weakness to push it down, the yen strength to push it down as well. But what happens if the euro dollar doesn't get weaker? What happens if the euro dollar actually sits right across? Then those previous two trades will be sitting right across. Or in the other scenario, what happens if the euro dollar actually goes and bounces back up as if we see further dollar weakness? So then you'll be overexposed on your euro Aussie and euro yen because you're anticipating the same move requiring the same conditions. So I'll say pick between the two before you get into a trade. The euro CAD, if the euro dollar does push down, yes, but I think that we might see some bounce on the euro CAD, right? Because of the Canadian dollar. You can see the Canadian dollar push towards the downside. Could it bounce back up? We do have a news tonight on a natural gas storage. If the uncertainty, if the concerns in the Russian gas supply continues, we could see oil prices climb higher. And if oil prices climbs higher, that could actually push the Canadian dollar back up again, towards upside again, into more demand, right? So push that back up before coming back down again. So just be a bit careful there with the euro CAD. Could be looking for a reversal, but if it breaks down, then we could see that being a bit dangerous. All right, fantastic, very helpful, fantastic. And then just looking at the other ones, the other pairs that you looked at, the Kiwi dollar and the Kiwi yen. So I have actually been looking at the Kiwi dollar quite closely. Why I say that was because yesterday, I'll show you this on the H1 time frame. Yesterday, the Kiwi dollar actually had a good big drop, right? So pretty much from 6 p.m. it dropped all the way to 11, 12, 1, 2 when the news came out. Dollar weakness pushed it all the way back up again. So why I say I'm very keen on the Kiwi dollar is because that downside, the evidence of the downside push or the downward pressure is quite strong. The downward pressure is quite strong. It only got pushed up because of the dollar weakness. At this point again, you can see that it was where we hit on the 22nd of July and we saw that big downward move. In this case, it hit that level again. Can we see another big downward move on the Kiwi dollar? This is on H1 time frame. Just bear in mind. So we're looking for that move towards the downside. Close this trade before the news and was wrong. So I guess you were buying? Oh no, you're selling. You're selling at that point and then you close and then it shot up. Or buying. Okay, you're buying at that point and it closed. It's okay. You missed some. I can tell you that. So the question here or the comment there on the chat is that for those of you who can't see the chat, is that we have a guy who bought there, say about there, and then closed off before the news and saw that big push, missing out on a possible profit there. But when the FOMC increased rates at 75% by 75 basis points, not 75%, 75 basis points to a 2.5% interest rate, my anticipation before the news, I was anticipating that to continue. I was anticipating for it to drop because we're looking at a rate increase. When I read through the statement and I watched the press conference, I actually thought it was a bit of a hawkish move, right? I thought that they were talking about further rate increases. They were talking about bigger rate increases. They're talking about, September might be more. I thought that we would see the dollar strengthen, but what actually happened, we saw the dollar weaken, pushing it up. So don't feel too bad for missing that buying trade or that buying the profit on the potential profit on your buying trade, because as much as it could have shot up, if he did not say that one line where, if Chair Powell did not say that one line of thinking that rates will eventually slow, I would say that we would have seen that big downward move on the Kiwi dollar. We would have seen that dollar strength come into play. But because of that one line, because as markets started considering, or the equity markets started considering that interest rates increases will slow down, possibly stop. That's why we saw that dollar weakness. So I kind of approach it a little bit. I mean, thanks for sharing your view and that you closed the trade. But I kind of, instead of looking at what was missed, I kind of think about how I could have been saved, right? Because you could have a buying opportunity, it shot up, it could have shot down and hit your stop loss as well. So just something to think about, just to make you feel less terrible about missing that trade. I hope that helps there, Zoran. All right, so that was the Kiwi dollar. And then we have the pound Aussie. Pound Aussie is actually really interesting at this point because I'm going to be a bit cautious about telling you this, but it looks nice because if I put in that line there, 1.7422, this was back in July, 20th of July. So I hit, came very close on 21st, came very close again on 27th, and then very close very recently there. So I'm thinking that we could see that rejection, right? That was the top level. How to expect the rejection? I would say that it needs to go past that 1.7360 level. It needs to go past this point to signal further downside. Why that point is because if I dragged it right across 0.7630, you can see that only when it breaks, actually to be extra safe, you can say it's that point there. So only when it breaks past this point, then we see that big downward move. So it didn't close below. We didn't see that big downward move, bounce back up. When it closed below, so it shoot down, failed to break higher, shot down some more. Once it broke back up, tested, broke down, failed to break higher, broke down again, failed to break higher, breaking down again, and then got supported a couple of times here over the last couple of days. So I would say do nothing on the Aussie, on the pound Aussie now, but look for bit of a possible breakout towards the downside. In this case, and as an example, I would say that my support level will be at 1.7222 or 1.7228. I'll be looking for a selling opportunity towards the downside. Stop loss at about 30 pips. Take profit at about 100. Okay, about that point is there. That could be your counter, bit of a counter trend trade or trend following trade because it is following towards the downside or breakout trade. One thing to pay attention to is that if you are looking to getting this trade, make sure you do your own due diligence, but also that we're going to see some level of hesitation at about that 1.7293 or 1.73 level. You can see it happening right across these points here. If I did put in a Fibonacci level, you can also see that it coincides very well, right on the spot, right on the dot with that 61.8 level. So this is why, and we were just talking about this earlier in the session, where we see that confluence between that 61.8. If it comes down, it breaks, and that support level. If it comes to this point, it's going to hesitate, it's going to bounce around before possibly breaking down or bouncing towards the upside. So just be careful on that. All right. Thanks, Deborah, for those questions and also the suggestions on which pairs to look at. Pound Aussie looks interesting, but it does need a little bit more waiting, a lot more waiting to happen for it to come down and test that level before we're going to see that further downside. So with that, anyone else with a question? Okay, if not, what I want to do is I want to look at the, we saw the US CAD already. Pound dollar is showing a very big retrace at this point. So it came very close to that 1.22 level. It's having a very big retrace. What I'll be looking for is if price can break below that 1.2150 level. Just to be extra clear, I wouldn't be looking to sell the pound dollar down. Why? It's because it's on that big upward move already. We've seen a pattern there as well, right? A push towards upside. So I'm looking for it to come down, possibly to see whether I can whether it'll bounce and buy it back up. It's a short-term thing. We could see that there's a bit of a confluence there, the 23.6 level there at that support, at a near-term support level. So I would be looking at this 1.2150 level to see whether it's going to break through or bounce. If it breaks through, I wouldn't be selling yet. I'll be watching it, looking to see what happens. Only if it bounces, then I'll be looking to buy, because I'm more into a trend following scenario rather than a big counter trend. Right? Question is that when would I look into a counter trend scenario? Possibly if it breaks below that upward diagonal trend line. Right? If it breaks below that point, so in this case, if it does that, then I'll be looking for a possible entry there. A long move to wait for, but because of the way it's been climbing, we need to see a big downward move before I would start thinking of selling it down towards the downside. Alrighty. One more pair. What else? Okay, let's look at gold. Oops, take that away. So gold, what I was looking at was for it to break out or break above that 1730 level, to push up towards that 1766 or 1770 level, right? So I'm still looking at this towards the upside. It has retraced a little bit, but I think that it's only a minor retrace. I'm going to see it push further. With that as well, why is because we have seen that happen in March last year, in April last year, and again in August last year. That big push towards the upside. So we're looking for a similar move, a big push towards that 1770 level on gold, because of that technical support. And also as that dollar index gets weaker, then we can see that the inverse relationship between gold and dollar index and the US dollar pushing price higher. All right, so just checking this out again. So you can see that dollar is pushing back up, it's pushing higher, bouncing off that 106 support level, 16.30 support level, pushing towards the upside. I don't think you'll get to 107 immediately. I think we're going to need some time for that because of that big downward move. So we could see that bounce and sit around in this range before slowly climbing towards upside. Any other pairs that you would like me to look through? Any other pairs that you'd like me to look through? Oil, right? WTI, respecting that downward diagonal, right? It's hit, it looks like it's going to turn down. So I think that oil is likely to trade within that range. So it's been doing this for a long time now, for a couple of days now. It's been trading between that 100 level, about that 100 level WTI, and then that lower level of 94 or 95. So I'm looking for this to continue trading, possibly maybe break out a little bit before coming back in, but to trade within that range. So and also together with Brent pushing towards upside. In this one, we have a diagonal resistance level, a horizontal resistance level at about 109. The next immediate level is at 104, about 104 there, right? So I think that Brent is likely to continue trading within that area. Might look like it's trying to break out, but then after that come back in again. So nothing too exciting on the energy prices because of so much uncertainty. Well, it's not clear uncertainty yet. Gazprom, from the Russian Gazprom, has cut one turbine and possibly cut another one. They've reduced the flow of gas to the Eurozone. It hasn't been dire yet, but we've seen some upside on oil prices. So I think that unless we see another shocking news, it's possibly going to trade within this area. If we see a shocking news, then we're going to see crude and WTI push stronger towards the upside. All right. We've done all these. I like pound. I would be watching pound quite closely as it comes back in. Right, I think that, but just be very careful, not ready to sell yet, because we've seen that happen so many times on the pound dollar. Looks like a big strong move, small tail, push towards the upside again, big strong move, small long tail, push towards the upside again. And in this point, looking like it's pushing down. The next 10 minutes, 9 minutes, we could see what happens here. But I think even if it comes lower, might be looking to see either a rejection or rather come down towards that 1.2090 level. Look for a possible rejection of the support to push back up towards the upside. Right, so a bit overextended, but something to watch out for on the pound dollar. It seems to be the most volatile pair from last night's FOMC decision. So we saw that big move, and everyone else had a move up, but not huge. The pound dollar had a big move towards the upside. Euro dollar dropping strongly again. Let me just check what's any big news. Nothing significant being released. All right, so nothing. Russia to shun US dollar. That's 3 hours ago. Nope, nothing particular, but we're just seeing this as, well, you could possibly think of this as a as price gets rejected by that resistance level, we see it turn towards the downside. Could euro dollar push down towards that 1.0127 if it goes down? If it goes down and breaks below that point at about 1.01, we might actually see further downside back towards that parity level on the euro dollar. Quite a big strong move towards the downside, rejecting that resistance level there. We could see that continue lower. Okay. Pound dollar still sitting there. Kiwi dollar needs to reject that level. US CAD bouncing back up. US yen not doing too much. Anything else? Any other questions? Euro pound is going to be interesting. All right, so as why I picked on euro pound is because as you look at the euro dollar pushing lower, as you look at the pound dollar as well pushing lower, on the euro pound here, look at it on H4 time frame, you can see that it's at that support level there. It's being dragged down because of the euro dollar weakness. I think that you could be looking to see whether it's going to break towards the downside. And if it does, the next big key level is at about 8263. So if it breaks below this point. I would say at about 0.83, below 0.8350. Stop loss about a 40 pip stop loss. Take profit about almost 80 pips there. So almost a 1:2 risk reward ratio towards the downside for the euro pound, which will be dependent on the euro dollar pushing lower strongly, continuing its downward move, and also for the pound dollar to drop, but not as quickly as the euro dollar, because if the pound dollar drops, then the euro pound is going to push towards the upside. It has that bit of inverse relationship. So I'm looking for the euro dollar to drop faster than the pound dollar to signal that we're going to see a further push towards the downside on the euro pound, with that possible trade below 0.8350. In this case, a bit of a 40 pip stop loss, above an 80 pip take profit, a 1:2 risk reward ratio on the euro pound. Right, you can look at this both on the H1 or also on the H4 time frame. Works well for both time frames. But you still need to wait for it to break or drop lower before we can look to sell it down. Pound yen is doing perfectly as was previously discussed. I was looking for it to drop, break below that 164.85 level to track down towards that 163 level. It's doing that exactly now. So if it comes down to this point, dragging this line right across, I would say that it might not break. It might not break from this point. It might come down, and also because we got that diagonal trend line there, right? So it might come down and be very tight to that support level and to that trend line there. So I would say just be a bit careful on the pound yen. Might come down, hit this level or hit in this range here before bouncing back up again. All right. Okay, so any further questions? Making sense so far? Dollar index still pushing up. And pound dollar not doing too much. It slowed down that drop already. The euro dollar is still dropping quite strongly. So hey, the euro pound looks like a good one. We're looking at the euro yen just then. We're looking at the euro yen just then. It's dropping significantly down already, almost down towards that support level. If it breaks that support level, then looking at it on H4 time frame, I would say that the next level could be at very tight one, will be at 136.60. I think it's a bit too near. I would say a major one would be at about 135.20. So if you missed out on that, then wait for it. Wait for the price to close. Wait for price to close below that support level. You could be looking at a medium to longer term trade below 136.90. Stop loss at about 70 pips. Take profit about 100 almost 140. So 1:2 risk reward ratio towards the downside. Following trend. Again, I like how it looks like it's going to set up on the euro yen if it breaks past that support level. All right. Super. So as we draw to the end of the session, please let me know in the chat. How have you found everything? Did it make sense? Was it helpful? If you can think of anything else I can tweak or as a feedback, I'll be happy to take that on board and try and make it a better session. Super. Thanks for that, Deborah. All right. So with that, bear in mind tonight there is a advanced GDP number to be released quarter-over-quarter, could lead to some dollar strength if it does come out at that 0.4, 0.5 or 0.6%. So it could lead to further dollar strength or short-term further dollar strength as we approach the end of the week. With that, trade well, trade safe, and I'll see you possibly next week. Take care now. Bye-bye.